Loans do not make you money. Paying premium makes you money. Paying extra interest is extra premium, and that is why you're making money. The act of being smart on how you utilize your money is what's making more money, aka the infinite banking concept, my friends. Hello, and welcome back to the podcast. Thank you very much for being here. All right, today let's talk about why taking loans does not make you money. This is sort of a hot topic. I've talked about it before. It's one of those topics that I'll be talking about until I am blue in the face because it's very confusing when you read Nelson's book and you read my book. In my book, in the case studies, you are going to see we're borrowing money, we're paying money back. It's very clean, it's very cut and dry, it's simple. In Nelson's book, he made you think a little bit. And so what Nelson did is said, okay, I'm going to borrow money, but I'm going to pay it back at a higher interest rate than what the insurance company is charging me. So if the insurance company is charging me 5%, I'm going to pay it back at 10. And that extra 5% that he was paying himself, he illustrated it going back into his policy. Now, this is why people think they make money taking loans, because they will read Nelson's book and go, oh, but look, he actually made more money when he took loans versus when he did not take loans. Yes, he did, because he paid himself more than the insurance company was charging him. So it looked like his policy was doing better, and it was doing better. Because now if we pay ourselves more interest, that extra money that went into the policy is earning compound interest and dividends. So long term, we have a bigger pool of money. So let's just remove the policy and let's just pretend that we have a savings account. And we've taken money out of savings and then we put it back plus interest. Do we have more money? Yes. Why do we have more money? Because we saved more money, right? We were honest. We took it out and we replenished it with interest. It's the exact same thing that Nelson is doing in his book. He is just trying to get you to understand that if you borrow money, pay it back at a higher interest rate. If you are willing to pay the bank 8 or 9% for operating expenses, and you borrow that money from the policy at 5%, why are you not paying it back at 8 or 9? Here is the thing. If you have paid your premium in full, you cannot get extra money in because it will MEC. It is a modified endowment contract. It's all going to grow taxable. And so what do we do with this extra money? If we borrow $100,000, we can only pay back $100,000. We can't put an extra $5,000 in there because it's going to MEC. It's not a loan repayment. It acts like the extra money is a premium payment, not a loan repayment. You do not make money taking loans. You make money paying premium. So what do we do with this extra $5,000, for example? Well, maybe we're going to start a new policy with it because we have this extra money. So start a new policy. If you wanted, you could have built your policy and structured it in such a way that we can put the extra money in. That's fantastic. A lot of people will say, well, Mary Jo, shouldn't we issue the policy at a higher dollar amount so I have a place to put extra money? Absolutely, we can do that. If I do it that way, eventually you're still going to borrow enough money that the interest is going to be more than what the policy can hold. And so we're going to have to start another policy anyway. So what happened when Nelson borrowed against his policies and paid extra back? Well, if it didn't fit in his policy as premium, then he started new policies. How do you think Nelson got 49 life insurance policies? Because he was honest and he always paid himself back. What you're seeing in equipment financing is Nelson illustrating what it would look like to have more than one policy or to have extra going in. Because if you put extra money in a policy, guess what? Now you have more money compounding, earning dividends. And so if we can't do it in one policy, we do it in multiple policies. But you are not making money taking loans unless you pay back extra. And the extra is basically a forced savings account. Most people do not do that. Are you still making money? Yes. Even if you don't pay back extra, you're still making more money because your money never left the account. It's earning compound interest and dividends, uninterrupted compound interest and dividends. So, yes, it is still okay to borrow against the policy. I had one of my clients last week who does not listen to my podcast, does not read the book, does not pay attention to any of this stuff, forgot why they have the policy. And they said, "Hey, Mary Jo, I just, these premiums are ridiculous. I want to stop paying." I'm like, "Well, if you need money, why don't you just borrow cash value?" "Well, I'm not going to pay interest to borrow my money." You're not borrowing your money. Your money is earning uninterrupted compound interest. That's why we have the life insurance policy. The point is when we borrow, we only can pay back what we've borrowed. If we borrow 100, we can only put 100 back. We can't put 105. We can't put 101. We can only put 100. And so anything extra then goes to a new policy to earn uninterrupted compound interest and dividends. I think that there's just this, people think that it's magic. The more money we borrow, the more money we make. The act of borrowing is not what's making the extra money. The act of paying extra back is making more money. The act of borrowing to buy things or do things that create cash flow is making more money. Okay. The act of being smart on how you utilize your money is what's making more money, aka the infinite banking concept, my friends. Yes, that's what the concept is about. Utilizing money correctly to make more money. The physical act of borrowing money and paying it back is not making you more money. I hate to tell you that. I hate to break that news to you. But there's so much information out there on the infinite banking concept, even coming from other infinite banking practitioners that are saying borrow money because it makes you money. How about we just disclose the whole truth? Let's disclose the whole truth and nothing but the truth, my friends. And that is, you have to be honest with your money. You have to be an honest banker. The first portion of Nelson's book, everybody wants to ignore. They want to jump right to the numbers and look at the magic. You need to understand why he talks about the grocery store, why he talked about Parkinson's law, why he talked about Willie Sutton's law, why he talks about headwinds and tailwinds. You need to understand that stuff. And if you don't understand it, go way, 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 way back when I did chapter study reviews. And maybe I will do them again. If you guys want them again, I'm happy to do them again so you don't have to go back a couple hundred podcasts. But those chapter reviews are there to help us understand why he wrote all this stuff that we think is pointless, but yet it's not pointless. It is there to get our brain to understand how to utilize money, how to think about money. Nelson always said it's all about the way you think. 100% about the way you think. If you are not thinking about money correctly, then we are going to have a struggle. The client that I just got off the phone with, she is struggling getting her head around this because she is a cash purchaser. She wants everything to be paid off. We're having to rewire her brain to think about cash flow, to not have this scarcity mindset that we're not going to have enough money. This is going to take some time to rewire. I just saw a YouTube video of Nelson talking about the noise And he compared it to growing a corn crop with a bunch of weeds. Once you get rid of all the weeds, you can see the corn. It's simple, right? But while all the weeds are in there, we have to muck through all that stuff to figure out where our corn is. It's the same thing. We have to muck through years and years and years of people telling us that we can only get paid X amount of dollars. We have to go to the bank and pay them interest. We are living in this little bubble. We need to burst the bubble so we can see the big bad world of infinite and how this works and how to create cash flow and how to think about money and how to utilize money. I was a cash girl. I wanted to pay cash for everything. I didn't want any debt. I was saving every red cent I had because I did not want to have any kind of debt. But guess what? I didn't have any kind of cash flow either. And so utilizing money is so correct. But this is not magic. This is not making money out of thin air. This is not producing all this extra money because we're taking loans. We are producing extra money going into the policy because we're honest bankers. And we pay ourselves back plus interest. And then that interest earns uninterrupted compound interest and dividends. That's either through our existing policy or through a new policy, however that looks. But this is not magic. If it was, I'd probably be in jail. People acting as if this is magic, people acting like this is just like something that's super special. It's not. It's our thought process. Let's get that correct and let's understand what we're doing so that we're not misleading people into thinking that the life insurance policy is just giving you this endless amount of money. If they did that, they wouldn't be in business very long. So, moral of the story, as I've said it, and I will say it till I'm blue in the face, loans do not make you money. Paying premium makes you money. Paying extra interest is extra premium, and that is why you're making money. All right, folks, let me know. Comments, questions, concerns, or if you've not gotten Nelson's book yet, I've talked to a lot of people that have not read Nelson's book. Why? What are you doing? What are you waiting for? Go to farmingwithoutthebank.com, grab the book there, go to Audible, get Nelson's book on audio. I frankly don't care. Get Nelson's book. You want to be a student of infinite banking because this is your money and you want to understand how to utilize this. I am not a financial advisor. I am not a broker. I am not a banker. This is not Mary Jo being your banker. This is you becoming your own banker, which means you need to participate in the process. Let me know if you need anything, maryjo@withoutthebank.com. Otherwise, go, my student, and learn. Have a good day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.